So let's go and take a look at here at the euro dollar. The euro dollar continues to remain weak, obviously, quite obviously. But the key thing is we're below the bias pivot. And as long as we're below the bias pivot, it's not like this is a 5 or a 30-minute chart. It's a 2-hour chart. As long as we're below this bias pivot, it's going to continue to remain weak. And I don't see a whole lot changing at this point. We're going into, I think it's going to be a decent FP. I think I saw some reports, they're looking at 189. Honestly, I thought it would be a little bit better than 189. I'm thinking closer to like in the 2 teens. I could be wrong. I'm not trying to make any, I'm just going by what's, the good data that we've seen lately. That's the only thing that I'm focusing on. So nothing, not anything else in particular, but I'm using that, the reports that we've seen to think that, at this point, that's what they probably will continue to go in and see a good NFP. And I think that will keep the weakness here in the euro dollar. That being said, and I did get the cash dollar over here updated. We came into our resistance here. If you look here, and when necessary, we'll jump around. But we've got our resistance on the bias chart at 102 from yesterday. And the high has been 101.99. But this is where we have this resistance. And the reason I'm bringing that up is because here we are moving higher. Okay, we're higher than we were yesterday. And look, this euro is holding up like a champ. And hang on one moment. I just want to look at some questions here. And the euro's holding up well. This is the exact same thing that happened last week, when we thought, okay, the euro is going to be a whole lot weaker. It's probably going to make a move to 484. I mean, we were thinking overall 450, but they'll make a move to 44. It'll bounce from 44, and the lowest it ever got to was 494. And that didn't surprise me because the cash dollar index remained strong. Now, Luca did make a good point. He says, "Morning, Paul. Have you seen the boon today? Cracking the bed and the floor. Surprised we haven't seen the euro dollar rally harder. Euro yen may really push up tomorrow if Draghi recognizes better than EU macro data." We'll have to see. One of the things we covered the news, and that one strategist was saying she thought tomorrow's ECB was far more important than the FOMC because they already expect the FOMC to go on and take action and raise rates. So everybody pretty much pricing that in. So they're not giving it that much weight. So it's kind of interesting. Tomorrow will be a very interesting day. I think Luke makes a good point too, is that now she said, the strategist was saying, I forgot her name, but she's out of Frankfurt, was saying she thought Draghi would play a pretty even keel. I think he will. Luca says, maybe he'll recognize a good EU data. He might a little bit. I don't think he wants to focus too much on that, because if he focuses too much on that good EU data, that pretty much takes the thing out of his tools as far as him trying to do even more with the euro. Then it's like, okay, if it's doing so good, you shouldn't be taking the action. But I think on a longer term basis, we have to keep an eye on this. And we discussed this yesterday in depth a bit. Look at how well the euro is holding up. And here's the cash dollar index, really pushing right at its highs of the day. And it did the same thing last week, and we couldn't break to these lows here. And now the cash dollar index is working higher, and still the euro dollar refuses to go lower. And things are starting to improve. We talked about this a week and a half ago. Remember, those European PMIs have been the best in years. So, like I said, my whole thinking is once we get past the FOMC, and the market's perception might be it's one and done for a while, at least till September, unless they really see data just really blowing up and they think they would take another hike in June, and I just don't see that. I think the Fed would they'd say, okay, that's 2 and 3 months. We're going to sit back and let it get soaked into the economy and see what's happening. We certainly don't want to push ourselves in a recession. So this may allow them for a pretty decent rebound in the euro, because you have to think in the back of your head, you had those very strong European PMIs, the best in years. So it's something to keep in the back of your head. Even though the euro is weaker, it's not like as if it's falling apart, and support is, I'm saying, is still going to remain at 525, and resistance is going to be here at 606. So nothing's changed on the euro. We're going to keep that here, and it's bearish because we're below the bias pivot, but support's going to come in at 525. We know 526 is 78%, and resistance is going to come up at 606. So no change there. So let's go and move into the sterling, into cable. And cable's still moving higher here. I talked about this yesterday. We're looking at support, and the prior day I had 2178 and made a move to that area. And if you remember, we moved it, I think we moved it right in here, and that was, okay, 2159. Thought it was even lower than that. But we said, no, forget it. You know, let's go and keep it here at that 2178. We're going to keep it right there and leave it. And we did leave it. But we took this dip lower. But 2140 is a 78%. And just exactly 40. There. 2140 is a 78%. And I told y'all, sterling loves the 78%. And I mentioned this morning we had a gentleman, and he was looking to get long. I think it's a 2158 or 2160, if I remember correctly. I told him, well, cable loves the 78%, 2140. There's some additional support at 2137. You know, it was up to him whether he wanted to wait or not. He ended up waiting, and he picked it up. I think he picked it up at right 2140 or 2142, and he's already up like 28 pips. So good on him. So for support today, we're going to say this 2140, which is a 78%. Because it looks like it's going to hold now. So I don't want to say, okay, now it's even going to go lower. So that looks good enough right there. And let's take a look at resistance. Now, this market has been exceptionally oversold for some time. And like I said, we finally made it here to the 78%. Let's move this over here or something. No need for it to be so far away. And where can we go to from here? Let's take a look. See, 23% comes in at 2240. On a short-term basis, we'll call the resistance right there. Looks like about 2145. Let's just mark this off here anyway. It's very short-term oriented, but that's okay. Provided this is going to hold. I think it will. If not, we'll have to obviously revise that. But and we're going to keep the resistance here at 2144. And we'll get a nice rebound here. Look at that. Very nice rebound. Rick says 2244 on cable resistance. Well, you know what, Rick, we're both singing from the same hymnal book. Because look, that's what I've got. 2244. Maybe you're subscribing to the same thing I do, which is the touches and the closes. So 2244, that's what I've got. This was a great little pickup. That one gentleman picked it up right there. I think he picked up right at 40 or 42. I don't remember. So if he did, he picked up, he already has 30 pips in his back pocket. Oh, thanks, Rick. Appreciate that. He said, well, you wrote 21. Okay, thank you very much. I appreciate that. Thank you for the correction. Appreciate it. Yeah, 2244. This market is deeply oversold. Deeply oversold. So, I mean, heck, just on a reasonable bounce, that probably takes us here close to 23, like 23.15. On a reasonable bounce. But for sure up in here, once you do that, you're talking right 100 pips off the bottom. So let's go on and move in to the next pair, which is going to be the Aussie dollar. Kiwi continues to remain quite weak. So we had 75.15, 76.53, and this market is just quiet as can be. All we've done is either got up here in anticipation of that RB announcement. Then all we do is turn around and move back down. Scott said, could be stalled by a good ADP. Yeah, I mean, we'll see what happens here. The ADP will be interesting to see. I mean, in the past, ADP and NFP don't necessarily correlate that closely or move that closely. Although I will say in the last, I think it's 2 months, they've been like almost spot on, if I remember correctly. Let's take a look here on this Aussie dollar. And I don't think we've seen much of a change. Let's move this over here. $75.19 is at 38%, and $75.15 is right here in this level. We got gold moving a little bit lower back to those lows again. Like I said, until you see the move, we don't have, here's the deal is, we don't have a catalyst to move. Here's why, different days you have to trade different ways. Okay, so here's the deal here. We don't have a catalyst at this point yet to necessarily, although the cash dollar is on its highs, to move the euro in a dramatic fashion or necessarily the cash dollar or gold. So when we come into these key levels or key support, it's probably better off that you just go on and day trade it, scalp it, grab what you can. Once we get past some of these events, then the doors will be open for a more significant move. So in case y'all are wondering there, so in a situation like that, and I mentioned that earlier in the show, if I was wildly bullish gold, then I'm buying it at 211. I'm hanging on for a long time. But we don't have a catalyst yet. We still have to get past ECB tomorrow, NFP on Friday, and FOMC on Wednesday. So when you get to these key areas, just take your money, get into a position, you're making some money. Don't hang on for, like I said, wow, I'm super bullish gold. I think we're going to 1,300. I'm hanging on. No, I mean, until we get past these events, take what you can go on and get. Depending on your own analysis, I mean, what you're looking at on a short-term basis, whether you're looking at 5-minute charts or you're looking at hourly charts, try and make a determination. But decided to go on and share that. On the Aussie dollar, we still had the 75.15 is nothing has changed. And let's take a look at the resistance, which we had at 76.53. And I don't think anything's changed there either. That'd be a key up in here. We could probably drop this a little bit lower. Let's take a look. On a shorter term basis, let's move that resistance realistically to 76.26. Once again, it's bearish. And the next up is going to be the Kiwi. And this thing just remains woefully weak. Let's take a look at this. Right here. And this thing, like I said, no matter what happens, it just keeps on going lower and lower and lower. I mean, obviously the weaker dairy auction certainly didn't help matters any. I think we had looks like nothing's going to change here. Our resistance is, our support, I should say, is still going to go and remain the same, which is going to be coming in right here at 69.50. Let's update that. And I think we kept that from, it's the same since yesterday. Hang on. Oh, we had an offset 69.45. We gave it a little bit of extra room, which is fine. We're actually below right now at 69.38, so let's take a look. And we had right there, 69.25. So we're going to move that here. There. And resistance would come in right there, 69.95. And of course it remains bearish. When we get back, we will get ready for ADP. Obviously, with the idea that we're getting a potentially stronger NFP, you're going to see what you're seeing right now. The bond's weaker. You're seeing the gold weaker because they're moving lower in anticipation of what could be a good ADP. So we'll be back in a few minutes. Thanks for joining us here on the Morning Edge webinar.